on the screen? Okay. So, by the way, I grabbed the raw data for this chart. I grabbed off of I think it's GraphHex.
Yep, GraphHex.
It was originally I think it was originally hex.info. So what I did is I grabbed the raw data and then I looked at the data on a log chart. So generally speaking, like whenever you're looking at financial assets, log charts are always the way to look at it because for example, like if whatever price point you're looking at the chart, you always look at it in terms of like a 10x scale at like the next tick mark on the log chart. So if you notice back when Hex first, if you notice like back when Hex first launched back towards like the tail end of 2019, the T share to ETH ratio was about 1%, so 0.01. And then since then, there was that huge expansion wave that took the T share price above a 0.1 ETH per T share. It actually peaked close to, I think this was around like somewhere around 0.3 to 0.4 at the peaks. So what I'm expecting is the next expansion wave for the T shares could very easily bring the T share to ETH ratio above 1 ETH per T share. Ooh. And then if you consider the price valuation for Ethereum this cycle, because Ethereum can very easily go to a multi-thousand dollar coin this cycle, you get to levels where somebody could be paying $9,000 per T share. So the expansion waves are pretty massive, and there is going to be a wide range like on the T share. So for example, if you get a huge wave that brings it up to like, I'm just going to throw a random number out, but let's say 1.5 ETH per T share, you'll basically get like a new range kind of similar to what we're seeing now, where it could basically oscillate between, let's say, 1.5 to 3/4 of an ETH per T share. But all that really matters is, on the grand scheme of things, the macro trend is going up on the T shares, as we're seeing on the log chart. So I won't be surprised to see the T share price exceed past Ethereum this cycle. So when people are saying, let's say, at a certain point you could have a higher T share price than Bitcoin, it is possible just based on the growth of what we're seeing now on the log chart. And the first one you'll see overtaken is Ethereum. You'll see the T share price exceed Ethereum. And then at a later point in time, after there's enough price history, after shaking people out of the market, like after tons of consolidation, I won't be surprised to see a floor at some later point in time where it's holding above 1 ETH per T share. And then really the sky's the limit, because this is about a year after launch. I mean, it's crazy just how much the T share per ETH ratio is going up, and it's very possible we just see absolutely mind-blowing numbers this cycle for a single T share. So that's why I will say again, like over and over again, and I haven't ran the numbers again recently, but it's going to cost, like, just in the short term, this is short term, it'll actually go much higher than this. It's going to cost somebody like $20,000 just to hit, let's say, a bare minimum squid with a minimum of like a 10 to 15 year stake length in very near future. And it's going to shoot way past that. So if you analyze the brackets, you start to get a sense of how expensive it is to, let's say, have a certain share of the network, and why like it's super important to get those kinds of deals now while they're there. And granted, you have to plan around that with the with the stakes, because if you're doing a 10-year stake, then obviously you're committed to that 10-year stake, unless you want to nuke your entire balance to do like an emergency unstake. But in the case for the T shares, generally, if you look back at Bitcoin as a reference point, those that manage to hold on the longest over very long periods of time are oftentimes the most successful. And this is true for like any asset, like regardless of cryptocurrencies, the same like in any financial market. Like generally the holders over long periods of time are going to beat out short-term speculators, short-term flippers, all that stuff. It's just going to play out that way. So those that are planning out, well, like years ahead, RG3 just he mentioned it, where you get to a point where you have just income, like perpetual income coming in, and it's going to be as expensive as shit for somebody to even compete like at these similar levels later on. Right. So the opportunity is to get into these higher bands compared to what you saw with Bitcoin. The opportunity is this cycle to plan ahead for that, because people next cycle are not going to, there's going to be a new baseline established, similar to the baseline that was established with Ethereum. Ethereum went from cents to $1,400, and then it had a bear market bottom close to $80. And let's say it hovered between 1 to 300 in the bear market, and that was the baseline. So you get these huge market cycles, you get a new baseline, and the new baseline for Hex could very well be multiples higher in price than what we're seeing now. Like the consolidation range Hex is in now, when Ethereum broke out, it's the same exact chart setup. When Ethereum broke out of its consolidation, same chart setup in the first cycle, it did not return to those prices. Even in the bear market, it was multiples higher. I think it was like $14 for like Ethereum in its consolidation, and then you had like a wick to $80, which didn't even last long for Ethereum. So you were still like 5 to 6x higher compared to the price, like the average price in this trading range that people on Uniswap are maybe just, you know, flipping in and out. And then you have like people like the accumulators are pulling supply out of the market. And after that, like people are going to buy, you know, at 10 cents or whatever the next baseline is. It's going to happen.
So what you're saying is that the Hex price, just basing out of what you just said right now, where the current price is. So what you're saying is that we could get an all-time low in the bear market of like 3 cents, 4 cents.
Yeah.
Yep. So the beginning there, that's when Hex launched, correct?
Yes. So right here at correct. So here at December 16, 2019, this was one of the first data points like off of Uniswap,
which was the price of shares per ETH, right?
Yeah, correct.
That's price of shares per ETH at launch, and then we saw this increase. So the share prices have started going up with ETH, which I mean it shows basically looks the same as the dollar too. I mean this looks almost identical to the dollar chart, right?
Yeah,
correct. Yeah. Oh, sorry. Go ahead.
Oh no, that's all I was saying. I'm just, but look how crazy. Look, you go back down to where it was at the lowest. How crazy that is. So during that first couple 2-3 months and stuff, Hex got below 1% of an Ethereum per T share. 1% of an Ethereum per T share.
Right.
And then we broke above it. Now we're above. So it takes 10% of an Ethereum to buy a T share of Hex now. And look, we're trending up. That means at some point, whatever the Ethereum price does, like there is a really, I mean, I'm telling you, there is like, it's a high fucking chance for this to happen right here. Ethereum's going to be $10,000 before this whole bull market's over. 10 G's, $10,000. That's a $1 trillion market cap for Ethereum. That's quite likely to hit this bull market. So we're talking about, it's possible that you could have just if this only track, let's just say.
So now explain the correlation to me real quick. Okay. So ETH price goes up, and I know that, you know, Hex tracks ETH, you know, it kind of, you know, accordions with ETH, because they're both trading pairs. But the share price, of course, is correlated because it belongs to Hex, and the Hex, you know, the share price is going up with Hex. So now explain to me what you were talking about with the rise that you saw. You know, you're talking about with this bull market that we're seeing, when the ETH price goes up, the share price is going to travel with it, right? Is that what you're explaining to me?
Yeah. So that'll definitely happen. So I guess even back to DCC's comment with like the $10,000 Ethereum, which is totally like, I think that's definitely going to happen for Ethereum. Like, not financial advice if you're holding ETH, but like in terms of the, let's say the T share to ETH ratio. So when Hex first launched, it took roughly 1%, so 0.01. It's just in decimal form. But if you multiply this by 100, you end up with 1% of an Ethereum per T share. when Hex first launched, and you had this little dip down below, but basically 1% was a very good baseline. So since this is plotted on a log chart, each leg up on the log chart is a multiple of 10x. So here, this goes, let's say, from 1%, and the next leg up is 10%. So if you take 0.1 and you multiply it by 100, you end up with 10%. And then up here at 1, if you multiply this by 100, you end up with 100% of an Ethereum in that scenario. So like it on the log chart, each leg up represents a 10x. And we've seen since Hex launched, the T-share price, which was 1% of an Ethereum, went from 1%, and it actually did over a 10x. Like, in fact, it did a 10x plus more above, let's say, that 10% baseline that we're now seeing across this consolidation here. So RG3 is completely right, where you're going to see correlation between, let's say, the Hex to USD price and the T-share to, you're going to see like a huge correlation there. But the thing is, the T-share to ETH price at a certain point is going to start, and there's a little bit of a separation now. The two, if you stack them on top of each other, you'll start to notice that the T-share to ETH price is actually starting to slowly, I think it's at, like, if in terms of the chart, it's about 1.6x higher. It's kind of hard to visually show that. I'd have to overlay the two on top of each other, but it has to do with like how the T-shares over time get more and more expensive. So like if you look at, and because of that, if you look at the T-share to ETH price over time, you'll start to see separation there, which is pretty amazing, like in terms of like the chart formation. So since the very first impulsive wave for Hex, it took it from 1% of an Ethereum to 10% of an Ethereum. It's completely possible that the next impulsive wave takes it from, let's say, a 10% of an Ethereum to a full Ethereum per T-share. So if somebody wants, let's say, 100 T-shares, that's 100 Ethereum. And most people, like in the market, like it's actually, and DCC actually knows a lot about like the stretch goal targets for a lot of retail investors. So I'm getting this information from what DCC looked into, but from his observation, basically 32 ETH is a stretch goal for like a lot of just retail that's just accumulating ETH. So it's going to get to a point where they're going to get priced out of certain brackets. So you have, let's say, the brackets, like you have the Poseidon, which nobody's in the Poseidon level yet. Then you have the whales, the sharks, dolphins, the squids. The squids are getting priced out in this next impulsive wave up. I mean, it's already expensive. Like it's all relative, but in the grand scheme of things, this next impulsive wave up is going to price out the squid bracket for most people. And it's the same thing, like, for example, like it's the same thing with Bitcoin, because T-shares are a representation of your network share. And if you look at, let's say, whales in Bitcoin, for example, every impulsive wave in Bitcoin also priced out like certain whale levels. Basically, you essentially have like a ladder in terms of how many coins people have, and every impulsive wave makes it harder and harder for a new whale to enter the system. So it's very possible we see, I think it's going to very easily go over like 1 ETH per T-share. It could even go as high as like 2 ETH per T-share during like the later stages of the bull market. But it just shows just how valuable these T-shares in reality can will go, let's say, over like a very long period of time. So the opportunity to me is like, it's here. Like I like the log chart, you know, whoever got in at 1%, this was like amazing. Like, so this was amazing. And then even at 10%, like this is still very early, but after the next like wave up, it just gets harder and harder each time. So it's going to end up creating a new baseline. Like there's everybody has a perception relative to where they got in, like on the price chart. But after each wave up, there's essentially a new baseline that will get established, and then the market will readjust around that baseline. And it could even become like, it could get to a point where somebody having, and this is far out, like having 10 T-shares could represent like a lot of shares in Hex, like with how this chart's going, because it's going to cost over 10 ETH for somebody just to get 10 T shares, and if they want more than that, it's just going to get harder and harder. So I think there's a lot of buying pressure just even amongst the squids to get to basically get the T shares while they can, because then the name of the game is like there's the strategies that like RG3 and DCC were mentioning as far as like T share preservation over longer periods of time. So you get this like gamified strategy where those that actually have these T shares are not going to like want to just give that up, because they have such a huge stake in the system, and because of that they're just going to get amazing returns over a long period of time. So on top of really low inflation. So like it's crazy, like just how incredible, like how well designed this is. Cause like even after T shares gets, let's say, priced out for most people, depending on which bracket, depending on what your goal is in terms of the brackets, you still have 3.69% inflation. So somebody could still 10 years from now hold liquid Hex or something like that, and they won't have this heavy inflation like entering the market compared to like these other coins. So yeah, I would say this cycle is definitely it's really an opportunity. Like I really see this as like an opportunity of a lifetime.